Hey guys, welcome to another Daily Market Report brought to you by Mike Bjork. Today is April 29th, and happy Friday to you all. Hope you guys have a great upcoming weekend here. And we got quite a bit of news releases today, so here's the economic news releases. We'll start off with the personal income. It was up a little higher than the consensus, so that's good news. People are obviously getting paid more, so we like to see that. Consumer spending up a little higher than the consensus, but off a little bit from the previous month. So still upwards, it's not bad. Core PCI or core PCE, excuse me, that's the personal consumption or personal consumer expenditure. That's what the Fed really looks at for their inflationary numbers, and it came in actually only 0.1%, so much lower. It dropped off from the previous month and came in where consensus came. And again, this is the core, this is the headline, and this is what the number that they really kind of look at. So good news there. So inflation is kind of long term. They're showing right now so far controlled right now. The other one was employment cost index. Came in a little higher. That one's probably a little on the negative side, if you want to say. Came in pretty close where consensus is, but a little bit higher. And then Chicago PMI down a little bit. You know, not great, but it's down a little bit from where the consensus or even where last month's were. So, but again, manufacturing hasn't really been an issue, so I wouldn't worry too much about that. And then consumer sentiment dropped off a little, dropped off. Well, actually, it's pretty close. The consensus was 70, and you're talking 69.8, so about almost the same where consensus were, and slightly above where it was when it came to previous month. So. Not much on the headline news today. I guess the big news everybody keeps watching is the royal wedding. So congratulations. Prince William and Kate. So congratulations. And, let's go on and take a look to see what's going on in the housing industry with the bond market and where interest rates are going. So here's the bond market here, as we kind of mentioned. We've had a couple of really nice raises. We're getting really it's nice rally upwards here a little bit here. And as I think I mentioned yesterday, my buddy Dan Rowett, who used to be a bond trader for Burns Stearns, had mentioned that right here, the 102.80 is going to be really an important point for us, as if seems to be a big ceiling that's kind of pushes back, we can see a nice big drop. But if we can close above this and hold that, we could see a nice big rally to maybe back what we saw back in December range, maybe up to 104. Right now we're about 102.88. And that can dramatically improve interest rates quite a bit. Now, I heard from him earlier today, this morning. He had mentioned that his feeling is that basically now with the Fed's announcements that now we're finally, the bond market's getting the pricing for the exit strategy of the quantitative easing too, because as before, the government were buying, and typically most bond traders will buy if the government doing what the government's doing. If the government's selling, they'll sell. If they're buying, they're buying. But because they're doing the quantitative easing, buying so much, they were actually doing the opposite because they were concerned about inflation, as we were kind of seeing these headline inflation numbers. So now that it's going the opposite, and it looks like they're actually, it doesn't appear to be doing a quantitative easing 3. We could see a nice little rally. The pricing, so basically, we weren't getting the over this time period. We weren't really seeing the actual pricing as I think many had expected, primarily because the other bond traders were selling in this situation. So now it looks like they could be in the buying mode again, and this could push bond prices up, which in turn will turn the interest rates or mortgage rates down. So that could help spark a nice little rally here. For how long of a period, we don't know, but we'll definitely need to keep an eye on this hit market. If we close up above and remain about 102.80, we can enjoy a nice long rally here, maybe coming into the summer here. All right, folks, you guys have a wonderful weekend, and keep in touch. And folks, I'm also a loan officer. If you're looking for a mortgage in the state of California, I can also help assist you. You can check out my other websites here at obviously at Mike's Daily Market Report and MikeBjork.com. Even CaliforniaMortgageTips.com and the Mike's Homebuyer University.com. I have some great resources there. But feel free to give me a call at 310-694-3544. I can do refinances, and I also do purchases. So I can help you get pre-approved to buy that next home here. So thank you, and keep me in mind.